So my name is Tanmay. I'm basically a product expert and heading a customer support team at MProfit. And I have CA Radha Mehta with me. She's a part of MProfit and also a product specialist. Um, so today's agenda for this webinar is basically to understand capital gain rules, tax loss harvesting as well. We'll go through asset-wise um, taxation rules, mainly for current financial year. Um, will showcase different kind of reports available in MProfit and how MProfit will help you basically to generate the different types of capital gains accurately. And definitely we'll basically talk about all the taxation rules as well in detail. Okay. Rather, you would like to add anything, or we can straight away jump into the actual presentation.
Yes, we can start with the presentation. Hello, everybody. Thank you for taking the time out today on a Saturday to join us for the capital gains webinar and tax loss harvesting. As you would know, last year in the union budget, there have been a lot of changes in the capital gains taxation, where the tax rates have also changed and the holding period definitions have also changed for the different kinds of asset classes. As a principal standard guiding rule that the union budget has come up with is that if there is any sale transaction which has happened post 23rd of July, that is on or after 23rd of July, if you are selling any capital asset, then for any listed financial asset, the holding period will be 1 year. That is, if you are holding any asset for a period of 1 year, and selling it post 1 year, it will be classified as a long-term capital gain or loss. However, if you're selling it within 1 year, it will be classified as a short-term gain. This rule is for all the listed financial assets. For any other kind of asset, which is not listed asset, the holding period is of 2 years. That is, if you have bought a asset and you're holding it for 2 years, and selling it post completion of 2 years, it will be classified as a long term. And if you're selling it within a period of 2 years from the purchase date, it will be classified as a short term. This is the standard guiding principle that, as per income tax guidelines, from 23rd of July has become applicable. If there is any sell transaction which is on or after 23rd of July, this new rule will be applicable, where for any listed financial asset, the holding period to classify it as a long term will be 1 year. And for all other kinds of assets, it will be 2 years. This is a standard rule. However, in detail for all the different kinds of asset classes, now we will go into step-by-step approach for each different asset class. Tanmay, we can go to the next slide.
Yeah.
For current financial year 24-25, the mutual fund categorization is dependent on the purchase date of the mutual fund. So if you have purchased any mutual fund before the 1st of April 2023, the categorization of mutual fund is purely equity and debt. However, if you have purchased the mutual fund after 1st of April 2023, there are 3 categories: equity, hybrid, and debt. Now, what are these categories and what is the definition of each categorization? If you have purchased any mutual fund before 1st of April 2023, if that mutual fund is having more than 65% exposure to equity stocks, it will be classified as an equity mutual fund. For example, a Kotak Blue Chip Fund, which predominantly invests in equity stocks, and because the exposure to equity stocks is more than 65%, it will be categorized as an equity mutual fund. However, if the exposure to equity is less than 65%, or if it is a fund of fund, or if it is a gold or a silver mutual fund, then the category for taxation will be a debt mutual fund category. So if the exposure is more than 65%, the taxation of equity mutual funds will be applicable, as the fund will be categorized as an equity mutual fund. For all other cases where the exposure is less than 65% into equity, if it is a fund of fund, or if it is a gold or a silver mutual fund, it will be categorized as a debt mutual fund. If you have purchased the mutual fund post 1st of April 2023, then If the exposure to equity stocks is greater than 65%, the tax category will be as that of a equity mutual fund. If the exposure to equity listed stocks is anywhere between 35 to 65% of the total investments of the mutual fund, it will be categorized as a hybrid mutual fund. If the equity exposure is less than 35%, or if it is a fund of fund, or if it is a gold or a silver mutual fund, it will be categorized as a debt mutual fund. So if any mutual fund is purchased post 1st of April 2023, there are three categories: equity, hybrid, and debt. If the exposure is greater than 65% in equity listed stocks, the category will be an equity mutual fund. If the exposure is anywhere between 35 to 65% for equity stocks, the category will be that of a hybrid mutual fund. And if the exposure to equity is less than 35%, if it is a fund of funds, or if it is a gold or a silver fund, it will be categorized as a debt mutual fund. This is the guiding mutual fund categorization principle based on which the current income tax guidelines for financial year 24-25 is applicable. The categories are similar to what it was for financial year 23-24 as well. However, from the next financial year, that is financial year 25-26, from 1st of April 2025, the categorization will change. We will hold a different seminar in next coming months where we will talk about the new categorizations and the new tax implications applicable from next financial year as well. For the current financial year, where you will be filing your tax returns in July of this year, the categorization is dependent on mutual funds purchased before 1st of April and mutual funds purchased after 1st of April. Okay, Tanmay, we can go to the next.
Yeah.
Yes. Now we have created certain tax examples for you, where we will show you for different kind of asset classes what is the holding period and what is the taxation. Just as a disclaimer, we'd like to highlight that before you file your income tax, we request you to kindly once consult your CA or tax advisor or any tax consultant for accuracy of the taxation rates and the tax amount for your capital gains. At MProfit, because we provide all the automations for your equity shares, contract note imports, mutual fund, etc., all of the capital gain calculations are provided by us, which are most accurate as per the income tax guidelines. However, from a taxation perspective, we recommend that you once consult your CA or a tax consultant before you file your returns. Now for stocks and equity mutual funds. In the previous budget in 2024, which came out, there has been no change made to the holding period definition for stocks and equity mutual funds. The holding period for classifying it as a long-term gain will be 1 year. That is, if you have bought any stock or equity mutual fund and sold within 1 year from the purchase date, it will be classified as a short-term capital gain or loss. If you have sold the shares or the equity mutual fund post completion of 1 year, it will be classified as long-term capital gain or loss. So there has been no change in the holding period definition for listed stocks and equity mutual funds. However, there is a change in the tax rate which will be applicable depending on the cutoff date. The cutoff date for all the different kinds of asset classes that we have, equity shares, equity mutual funds, debt mutual funds, hybrid mutual funds, REITs, InvITs, is 23rd of July 2024. So there is a different rule which is applicable if you are selling any security before 23rd of July 2024 and if you are selling any asset on or after 23rd of July 2024. In this example, in stocks and equity mutual funds, if you see, if you have sold the script or the equity fund before 23rd of July 2024, the short-term capital gain will be 15%. And if you have sold after completion of 1 year, but before 23rd of July, the long-term capital gain will be 10%. For equity stocks and equity mutual funds, income tax has provided an exemption limit of 1 lakh. Both these short-term tax and long-term tax rules are applicable if you have sold before 23rd of July. Let me just repeat this part, where if you are holding any stocks or equity mutual funds, the standard guiding principle is if you are holding it for 1 full year and then selling it, it will be classified as long term. If you are selling it within 1 year of the purchase date, it will be classified as short term. Now, if you are selling it before 23rd of July 2024 and 1 year is not completed from the purchase date, it will be short term and the tax rate applicable will be 15%. However, if the 1 year criteria has been met before and you are selling it before 23rd of July, it will be classified as long term and the tax rate will be 10% with the exemption limit of 1 lakh applicable. If you are selling the stock or the equity mutual fund on or after 23rd of July, the short-term capital gain will be 20%. And if it is under long term, the capital gain will be 12.5% with the exemption limit of 1.25 lakhs. So, in stocks and equity mutual funds, although the holding period definition of 1 year is not changing, the tax rates have changed depending on when you're selling the script. So, if you're selling it before 23rd of July, for short term, it will be 15% and long term 10% with the exemption limit of 1 lakh rupees. If you're selling it post on or after 23rd of July 2024, the short term gain will be taxed at 20% and the long term will be taxed at 12.5% with the exemption limit of 1.25 lakhs. Now I'll ask Tanmay to show how you can generate the capital gain report for your stocks and equity mutual funds and how it is shown, how the long term and short term classification is seen in the report. Tanmay, you can.
Sure, thanks, Radha. Yeah. So we have already added a couple of transactions for stocks and mutual funds both. Uh, to show you the transactions quickly. So for example, K Fintech Technologies, as you see, there are a couple of transactions, buy and sell transactions added. And similarly for mutual fund as well, Motilal Oswal mutual funds. I've added a couple of transactions. So I'll show you the report as well. So as you're already aware, most of the members must be already knowing that MProfit provide very accurate capital gains, and you can directly upload the transactions into the system through contract notes, or for mutual funds, we have a CAS API available to get all your mutual fund transactions into MProfit. Once you have all the transactions added into the app, you can simply go ahead, generate the reports, and we have a reporting module available where there are different subcategories, and under capital gains, you can generate capital gain ITR format report. Along with the standardized ITR format, we also have tax software formats available. So for time being, I'm showing you the capital gains ITR format. So as we're looking at stocks capital gain, I'm opening this stock capital gain report, selecting current financial year, for example, and generating the report. So as Radha also mentioned, if the holding period is less than 1 year, then it will be treated as a short term. If it is more than 1 year, then it will be treated as a long term. So in this case, you can see that K Fintech Technologies is purchased on Jan 24 and sold in May 24, which is less than 1 year. So it is showing it as a short-term capital gain, which is of 8,300 rupees. You can see that in the last column, capital gain. And similarly, the asset is purchased in Jan 24 and sold after 1 year, that is February 25. So in this case, the criteria is more than 1 year. The holding period is basically more than 1 year. So it will be treated as a long-term capital gain. So in the last column, you can see that the second row, last column, you can see 7,575 is a long-term capital gain. So system will automatically bifurcate these states. Obviously, you don't have to worry about the cutoff dates or the holding period rule. A system will automatically follow that, and you will get the ready-made reporting from MProfit as a short-term and long-term capital gains. Similarly, for mutual funds, if I generate the capital gains report for mutual fund equity, I'll select current financial year. So Motilal Oswal Mid Cap Fund is the fund we are looking at. So as you can see, this is showing long-term gain because the mutual fund is basically purchased in Jan 2021 and it is sold after 1 year. So for April 24 as well as November 24. So in both the cases, it's a long-term capital gain. If it is within 1 year, then obviously it will be shown as a short-term capital gain. So these reports are ready-made available in MProfit, which you can use.
Thanks, Tanmay.
Yeah.
Now, moving on to debt mutual funds. For debt mutual funds, there are two rules for short-term and long-term. For mutual funds purchased before 1st of April 2023 and mutual funds purchased after 1st of April 2023. First, we will discuss about the debt mutual funds which are purchased before 1st of April 2023. In this case, whenever the mutual fund is purchased before 1st of April, the rules are different for selling it before 23rd July 2024 and for selling it on or after 23rd of July 2024. For example, let's take the scenario when the mutual fund is purchased before 1st of April 2023 and sold before 23rd of July 2024. The holding period for classifying it as a long term is 3 years. So if you have purchased the mutual fund at any time and you have held on to the investment for 3 years and then sold it, it will be classified as long term. If it is sold within 3 years of your purchase date, it will be classified as a short term gain or loss. If the mutual fund is in the short term category, that is the holding period is less than 3 years and you have sold it before 23rd of July 2024, the tax rate is the slab rate. That is, the short term gain will be added to the assessee's total income and taxed as per the slab rates which are provided by the income tax. If you have sold before 23rd of July, but the holding period is more than 3 years, then it will be classified as a long-term gain. For long-term gain, the tax rate is 20% with indexation benefit provided. So, for any mutual fund purchased before 1st of April 2023, but sold before 23rd of July 2024, the holding period definition is that if you are holding the mutual fund for a period of 3 years and then selling it, it will be classified as a long-term capital gain. If you're selling the mutual fund within 3 years of the purchase date, it will be classified as a short-term capital gain. For short term, the tax rate will be slab rate. That is, the total short term gain will be added to the assessee's income and will be taxed according to your tax slab. And if it is a long term, it will be taxed at a 20% rate with indexation benefit provided. Scenario 2, where you have purchased it before 1st of April 2023 but are selling it on or after 23rd of July 2023, the holding period rule from 3 years now changes to 2 years. That is, if you are holding the mutual fund for a period of 2 years and you are selling it post completion of 2 years, it will be classified as long term. If you are holding it for only a period of 2 years and selling it before completion of 2 years, it will be classified as a short-term capital gain. The tax rate for short-term capital gain will be slab rate. That is, it will be the short-term gain will be added to the assessee's total income and it will be taxed as per the income tax slab rate. If it is a long-term capital gain, then the tax rate will be 12.5%, but here indexation benefit will not be provided. So indexation benefit is only provided if the sale happens before 23rd of July 2024. If the sale is happening on or after 23rd of July 2024, then there is no indexation benefit provided. Now, to summarize, for any debt mutual fund which is purchased before 1st of April 2023, there are two scenarios basis which the tax rate and the holding period for classifying it as short term and long term has also changed now. Scenario 1, where you're selling the mutual fund before 23rd of July 2024. If you are selling this before completion of 3 years, then it will be classified as short term and the tax rate will be as per your income tax slab. However, if you are selling it post completion of 3 years, but before 23rd of July 2024, it will be classified as long term and the tax rate will be 20% with indexation benefit provided. Scenario 2, where you're selling the debt mutual fund on or after 23rd of July 2024. If you are selling it before completion of 2 years, the tax rate will be as per the slab rate, that is, your income will be added to the total income. And if the 2 year has been completed and you're selling it post completion of these 2 years from the date of purchase, it will be classified as a long term gain or loss. And the tax rate will be 12.5%, but without any benefit for indexation provided. Now, let's see this with an example where we've created multiple scenarios to show you a debt mutual fund which was purchased before 1st of April but sold before 23rd July. How will short term look like and what will be the long term? Similarly, if it is sold on or after 23rd July, what is the short term and the long term?
Sure, thanks, Radha. So just to showcase this, I'm referring to the Aditya Birla Sun Life Medium Term Fund, which is debt fund. So again, we can go to the report section under capital gains ITR format. And for debt and hybrid funds, there is a separate section available. So I'm clicking on mutual fund debt and hybrid. Now, in this case, we are providing an option to generate entire current financial year as a single report. And also we are giving a bifurcation to basically understand if you are getting confused or if there is a more clarity required, you can always generate two separate reports for the same financial year. So one report is for financial 24-25, which is generated from 1st April 24 till say 22nd of July 24. And the second will be from 23rd July onwards till the last date of the year, that is 31st March. So in this case, I'm selecting the first option, financial year 2024 till 22nd of July 2024. I'm generating this report. So as you see, this particular case is for Aditya Birla Sun Life Medium Term Fund, which is a debt fund. And as per the income tax guidelines, if the hybrid fund is purchased before 1st April 2023. So in this case, you can see that Aditya Birla Sun Life Medium Term Fund is purchased before 23, that is on April 21, for example, and sold within 3 years. So the selling date is 1st April 2024. So it is considered as a short term, and you can see the short term gain. Similarly, the purchase criteria remains the same, that is purchased before 1st April 2023. So in this case, if you see the last row, it says it shows basically 10th of April 2021 and sold after 3 years, but still before 23rd July 2024. So you can see that it is purchased in April 21 and sold within 3 years. Uh, sold after 3 years, that is June 2024. So it is considered as long-term capital gain. This particular criteria is only for the hybrid fund purchased before April 2023 and sold before 23rd July 2024. Okay. So as Radha explained, the holding period, if it is less than 3 years, it is considered as a short-term capital gain. If it is more than 3 years, then it is considered as a long-term capital gain. Similarly, if you want to see the overall capital gain calculation for hybrid funds sold after 23rd July 2024. In this case, we can generate a similar report, but we can select a period. As I selected till 22nd of July 2024, I can select from 23rd July onwards. Now, this report will show if you have sold a particular hybrid fund after 23rd July 2024. So in this case, if you see, Aditya Birla Sun Life medium term plan, which is a hybrid fund, is purchased on July 2022 and sold on July 2024, that is 24th of July, which is still less than 2 years. That is the reason it is considered as a short-term capital gain. Similarly, if the same fund is sold after 2 years, which is, let's say, if you see the last row, 16th of August 2024, it will be considered as a long-term capital gain. So in this case, it's showing 8,000 as a long-term capital gain. So this, again, this bifurcation will be automatically done by the system depending on the purchase date as well as the sale date. And for uh, considering the calculation, we will be considering the cutoff date as well as 23rd of July 2024. So this covers the debt mutual fund, both the cases, purchased before April 23 and sold either sold before 23rd of July 2024 or sold after 23rd July 2024. So Radha, we can move to the next slide, which is debt mutual funds purchased after 1st April 2023.
Thanks, Tanmay. Now, the second equation to debt mutual funds is if you have purchased the mutual fund after 1st of April 2023. In this case, there is no definition of short term or long term. That is, irrespective of the holding period, it will always be classified as a short term capital gain or loss. That means if you have purchased the mutual fund after 1st of April 2023, whether you hold it for a period of 6 months, 1 year, 3 years, or 10 years also, it will always be classified as short term, irrespective of any holding period. And the taxation will be that of the slab rate. That is, your short-term capital gain will be added to your total income and be taxed as per the income tax slab in which you are, which is applicable to you. So any debt mutual fund which is purchased after 1st of April 2023, there is no holding period definition which is applicable to that fund. Anytime you sell this mutual fund, irrespective of the holding period, it will always be classified as short term, and the tax rate applicable will be that of your slab rate. So your short term capital gain will be added to your total income and it will be taxed as per the tax slab which is applicable to your total income. Now we will show you for how in MProfit you can generate the capital gain report and see for the capital gain for all the debt mutual funds which are purchased after 1st of April 2023.
Yeah. So for the same, we are considering JM liquid fund growth. And again, I'm going to the report section, selecting capital gains, capital gain ITR format, and I'm selecting mutual fund debt hybrid option. In this case, I'll simply select current financial year and generate the report. Yeah. So if you see the last fund in the short-term capital gain list, which is a JM liquid fund growth, if this fund is purchased after 1st April 2023 and sold any time after that, will be always considered as a short-term capital gain. So in this case, you can see it is generating 4,000 as a capital gain. Okay, so there is no criteria of a holding period. So if you are selling after 1 year, after 2 year, after 3 years, it will be always considered as a short-term capital gain. So in this case, JM Liquid Fund, it is purchased on October 2023 and sold, let's say after 1 year, which is December 2024, it is still considered as a short-term capital gain. And no matter, there is no holding criteria here. So even if you are selling uh, a debt mutual fund which is purchased after 1st April 2023 and you are selling any time within 1 year, after 1 year, within 2 year, after 2 years, it will be always considered as a short-term capital gain. Yeah.
Now, moving on to hybrid mutual funds. These mutual funds are taxed. These mutual funds are where the equity exposure is anywhere between 35 to 65%, and they are categorized as your hybrid mutual funds. In this case, there is no requirement of the purchase date. That is, In debt mutual funds, we saw that the rules are different if you have purchased it before 1st of April 2023 and if you have purchased it post this date. However, in hybrid mutual funds, there is no criteria for the purchase date. The only definition changes and the tax rate changes will be applicable basis the sale date. Now, here also there are two scenarios. Scenario 1, where you are selling the hybrid mutual fund before 23rd of July 2024. In this case, if the holding period is 3 years, if you are selling any hybrid mutual fund after completion of 3 years, but before 23rd of July 2024, it will be classified as a long-term capital gain. However, if you are selling the hybrid mutual fund before completion of 3 years, it will be classified as a short-term capital gain. If this sale is happening before 23rd of July and it is falling under short-term capital gain because the holding period was less than 3 years, the tax rate will be the slab rate. That is, the short-term capital gain will be added to your total income and will be taxed as per the applicable slabs as per the income tax. If the holding period is more than 3 years and you have sold it before 23rd of July, then the tax rate is 20% with indexation benefit provided to you. So, irrespective of the date of purchase, if you are selling the hybrid mutual fund before 23rd of July for a holding period of less than 3 years, that is, you have sold the fund within 3 years from the purchase date, it will be classified as a short-term gain and it will be added to your total income and taxed as per the applicable tax slabs. If the hybrid mutual fund is sold before 23rd of July, but the holding period is 3 years, that is, you have sold this fund after completion of 3 years, then it will be classified as a long-term capital gain and the tax rate will be 20% with the indexation benefit provided to you. Next, this is scenario 1. Now, scenario 2 is where you have sold the hybrid mutual fund on or after 23rd of July 2024. In this case, the holding period rule changes to 2 years. That is, if you are selling the mutual fund within 2 years from the purchase date, then it will be classified as a short-term capital gain. If you are selling this mutual fund post 2 years from the purchase date, it will be classified as a long-term capital gain. So if you are selling a hybrid mutual fund on or after 23rd of July 2024, the short-term capital gain for a holding period of less than 2 years, that is for any sale which is happening within 2 years from the date of purchase, will be classified as short-term and the tax rate will be slab rate, that is it will be added to your the short term will be added to your total income and will be taxed as per the applicable tax slabs. If you are selling the hybrid mutual fund post completion of 2 years and on or after 23rd of July 2024, it will be classified as a long-term capital gain and the tax rate will be 12.5%, but here no indexation benefit will be provided to you. So the indexation benefit is only applicable if you are selling the mutual fund before 23rd of July 2024. If any sale is happening on or after 23rd of July and the classification is that of a long-term, indexation benefit will not be applicable. To summarize the taxation for hybrid mutual funds, there are two scenarios. Scenario 1, where you're selling the fund before 23rd of July 2024. In this case, if you have held the mutual fund for a period of 3 years from the date of purchase and then sold it, it will be classified as long term and the tax rate will be 20% with indexation benefit provided. If you are selling the mutual fund within 3 years from the purchase date, it will be classified as short term and the tax rate applicable will be that of the slab rate, that is the income will be added to your, the gain will be added to your total income. Scenario 2, where you're selling the hybrid mutual fund on or after 23rd of July 2024. In this case, if you are selling this fund within 2 years from the date of purchase, it will be classified as short-term capital gain, and the gain will be added to your total income and will be taxed as per the applicable tax slab. If you are selling the mutual fund post completion of 2 years, it will be classified as long-term, and the tax rate will be 12.5%, but without any indexation benefit. Now we will show you how the same hybrid mutual fund capital gain short-term and long-term looks like in MProfit's capital gain report.
Yeah, thanks, Radha. So to understand the hybrid mutual fund capital gains, we are considering the quant multi-asset fund growth fund. So I'm again going to the reflection, selecting capital gains and capital gain ITR format. And we have this mutual fund debt hybrid option available, which you can use. Okay. Now, in this case, as we are seeing two different criterias, here purchase date is not important, but the overall criteria is divided depending on the sell date. So in this case, I'm selecting a financial year wise and selecting this option till 22nd of July 2024. So we'll look at the first criteria where you have purchased the hybrid mutual fund on any day, but sold before 23rd July 2024. So in this case, the first line item you see, again, the purchase date can be anything, but if it is sold on April 24, that is before 23rd of July 2024, and the holding period is less than 3 years, then it will be considered as a short-term capital gain. So as you can see in the first row, purchase date is April 21, sell date is April 24, which is less than 3 years. Hence, it is considered as a short-term capital gain. So at the top of the fund name, you can see short-term capital gain, and it is shown as 6,000 rupees in this case. Similarly, if you are selling this particular fund after 3 years, but again, before 23rd July 2024, then it will be considered as a long term. So in the long term section, fourth row item, you can see it is purchased in April 21 and sold in June 2024. So it will be considered again, the sale cutoff date is again before 23rd July 2024 only. That is the reason it's June 24. But as this has crossed the holding period of 3 years, it is considered as a capital gain. This can be a gain or loss. Similarly, if you want to see the second scenario, if you are selling a hybrid fund after 23rd July 2024, for that we will use a second option. So in this case, I'm again opening the similar report, but I'm selecting financial year 2024 and selecting from 23rd July 2024 onwards. Yeah. So in this case, if you see the first row again, quant multi-asset fund, it is purchased in July 2022 and sold on July 2024, which is basically less than 2 years. Hence, it is showing it as a short-term capital gain. Similarly, if you see the long-term row, which is the fourth row here, the hybrid fund is purchased on July 2022, but sold after 2 years, which is I've used the date as August 2024. So it is automatically considering it as a long-term capital gain. Again, all these cutoff dates, the holding period criteria are already handled from MProfit's end, and all these calculations will be completely automatic. So you can straight away generate these reports and use it for filing purposes.
Thanks, Tanmay.
Yeah.
Next, we go to traded bonds. In this case, the holding period is of 1 year. There has been no change made in the budget of 2024. If you are holding the bonds for a period of 1 year and selling it post 1 year, it will be classified as long term. If you are selling the bonds within a period of 1 year, it will be classified as short term. Again, there are two scenarios here. If you are selling the bonds before 23rd of July 2024, the taxation for short-term gain will be slab rate, that is, it will be added to the total income. And if you are holding it for a period of more than 1 year and selling it before 23rd of July, the long-term capital gain tax will be 10%, but with no indexation benefit provided. If you are selling the traded bond on or after 23rd of July 2024, the short-term capital gain will be again slab rate, that is the gain will be added to your total income. For long term, it will be 12.5% with no indexation benefit provided. So for traded bonds, it is fairly simple. The holding period remains 1 year. The only change here is the rate of tax for long-term gains. If you're selling it before 23rd of July, it will be 10%. And if you're selling it on or after 23rd of July, it is 12.5%. Now, Tanmay will show you how you can see the traded bonds capital gains in the MProfit side.
Yeah. So for traded bonds, we have a separate asset category, as you can see on the screen. So for this particular example scenario, we are considering Piramal Capital and Housing Finance bond. Okay. Similarly, you can go to the report section, generate the capital gain report, capital gain ITR format. And for traded bonds, we have a separate section available. So you can click on traded bonds button. In this case, it's pretty simple. 1 year is the criteria for long-term capital gain. So I'm selecting current financial year and generating the report. So in this case, I have used only long-term example. So if you look at the third row, Piramal Capital Housing Finance bond, it is purchased back in April 2021 and sold after 1 year. That is almost after 3 to 4 years. That is on September 2024. As per the holding period, if anything is sold after 1 year, it will be considered as a long-term capital gain. So in this case, Piramal Capital Gain Housing Finance is showing a long-term capital gain of 300 rupees.
Okay. Next, we go to sovereign gold bonds. In this case, there are again two scenarios. Scenario 1, where you're selling the sovereign gold bonds before 23rd of July 2024. In this case, if you are holding the bonds for a period of 3 years and selling it post 3 years, it will be classified as long term. And if you are selling the SGBs within a period of 3 years from the date of purchase, it will be classified as short term. If sold before 23rd of July, the tax rate for short term is slab rate, that is, it will be added to your total income. And if it is long term, there are two rates. One, if you want to take the benefit of indexation, the tax rate will be 20%. If you want to do the taxation without taking benefit of indexation, then the tax rate will be 10%. So if you're selling the SGBs before 23rd of July 2024, selling it within 3 years from the date of purchase, it will be classified as short term, and the short term gain will be added to your total income and taxed as per your income tax slab rate. If you are selling it post completion of 3 years, it will be long term. If you want to take benefit of indexation, the tax rate will be 20%, and without indexation, the tax rate will be 10%. Scenario 2, if you are selling the SGBs on or after 23rd of July 2024. In this case, the holding period has now changed to only 1 year. That is, if you are selling the SGBs within 1 year from the date of purchase, it will be classified as short term, and that gain will be added to your total income to be taxed as per your income tax slab rates. If you are selling the SGBs post completion of 1 year, it will be classified as long term, and the tax rate will be 12.5% with no indexation benefit available at all. So, two scenarios: sold before 23rd of July and sold on or after 23rd of July. Sold before, holding period is 3 years. Before 3 years, it is short term added to your tax slab. Post 3 years, it is 20% with indexation, 10% without indexation. Sold on or after 23rd of July, short term 1 year and tax rate added to the slab. Long term greater than 1 year, 12.5%, no indexation. Now we'll show you how the SGBs look like in our capital gain reports.
Yeah. So again, we are using the similar report just to again show you. You can go to the report section, capital gains ITR format, and you have to use the traded bond section only. So normal bonds, listed bonds, as well as sovereign gold bonds are covered under the traded bonds asset class. So the capital gain treatment, even if it is different, it can be generated or seen using the single report. So in this case, I'm selecting a traded bonds again. As there are two different criteria for sovereign gold bond, that is sold before 23rd July 2024 and sold after 23rd July 2024. I'll be using two different reports for showcasing. So in this case, in this case, I'm just using current financial year and generating the report. Even there are two different criteria, we are giving it into a single report only. In this case, let me just select the period as all to date because there are certain cell before 23rd July 2024. So I'll just select all to date period. So let's look at the first criteria of sovereign gold bonds. If the bond is purchased on any date but sold before 23rd July 2024, so in this case, it is sold on Jan 2024, which is less than 3 years. So it is considering it as a short-term capital gain. Okay. Similarly, again, the purchase date can be anything, but sold before 23rd July 2024, and it is completing the 3 years. So if I scroll down at the bottom of the screen, you can see that it is purchased on April 2024, April 2021, but sold after 3 years. That is June 2024. So it is considering it as a long-term capital gain. Now, this is the case where both the cases, the bonds are sold before 23rd July 2024. That is the cutoff date. This is one scenario. Similarly, the second scenario where if you have sold the bond after the cutoff date, that is 23rd July 2024. So if you look at the second transaction, it is purchased in October 2023 and sold within 1 year, that is August 2024. It is considering it as a short-term capital gain. Similarly, if I scroll down, if you see the second case, the last row of the sovereign gold bond, it shows basically the bond is purchased on October 2023, but sold after 1 year, that is December 2024. So it is considered as a long-term capital gain. So in this case, we are covering both the scenarios in a single report, which is purchase date can be anything, but if the bond is sold before 23rd July 2024, it will be visible in the same report. Even if it is after sold after 23rd July 2024, it will be still covered in the single report. But the criteria will be properly followed, mainly the holding period criteria. So again, just to repeat, if the bond is sold before 23rd July 2024 and the holding period is 3 years, it will be short-term capital gain. If it is more than 3 years, it will be a long-term capital gain. Similarly, if the bond is sold bond is sold after 23rd July 2024, and if it is completing the holding period criteria of 1 year, then it will be considered as a long term. If it is less than 1 year, then it will be considered as a short-term capital gain. Yes, Radha, you can continue with the REITs and InvITs. Radha, are you there?
Yes, sorry. Yes, I was
Yeah,
on. Yes, sorry.
yeah.
For REITs and InvITs, again, there are similar classification like for SGBs. If you are selling it before 23rd of July 2024, within 3 years, it will be classified as short term and the tax rate applicable will be that of 15%. If you are selling it post completion of 3 years, then the tax rate will be 10% with the exemption limit of 1 lakh rupees. Scenario 2, if you're selling the REITs and InvITs on or after 23rd of July 2024, for short term, the holding period is now 1 year. So if you're selling it within 1 year from the purchase date, it will be classified as short term. The tax rate will be 20%. And for long term, if that is selling post 1 year, it will be 12.5% with the exemption limit of 1.25 lakhs. Now we'll see quickly, before we go to tax loss harvesting, just quickly, Tanmay, we can show one slide and then we can quickly move to the tax loss harvesting.
Sure, sure, sure. So let me quickly show you the report where just like mutual funds, traded bonds, we definitely have the report for REITs and InvITs as well, and that is covered under the stocks category basically. So you can generate the stocks report, and in this case, I'm just generating all to date report, and both the criterias will be fulfilled for REITs as well.
Tanmay, we can show the asset class for REITs and InvIT separately.
Sorry, sorry. Yeah, in this case, you can generate a separate report for REITs and InvITs, and uh, then you can basically see. So in this case, we are considering Mindspace Business Works rate. Even if you are adding it under stocks and ETFs category, the capital gain report is available separately, which you can generate. So in this case, you can see short term and long term. I won't go into detail as Radha mentioned in interest of time. So, but it is properly handled for REITs if you have sold before cutoff date, that is 23rd July 2024, or if you have sold after that cutoff date. So we'll move to the next slide, which is tax loss harvesting.
Now for tax loss harvesting, if you plan to optimize your capital gains by making a sale transaction where you're having a capital loss, in that case, you can use a unrealized capital gain report. What tax loss harvesting essentially means is that you can sell a loss-making security to offset the capital gains on other assets. So for example, if your capital gain is 50 lakhs and you sell a script where the loss is 10 lakhs, then that you can offset against your 50 lakh capital gain to give you a net capital gain of 40 lakhs. In this scenario, there is a difference between offsetting short-term and long-term capital loss. If there is a short-term capital loss, it can be set off against short-term and long-term both gains. However, if there is a long-term capital loss, that can be set off only against long-term capital gain. We have a unrealized capital gain report where we show you if you are selling any script today, then whether it will fall under short term or long term and what will be the quantum of that gain. So if you want to optimize your capital gains from a perspective of tax loss harvesting, then you can use our unrealized capital gain report for the same, which you can see right now on the screen, where we are showing you if you are selling the shares today, for example, then for which scripts where it will fall under short term and what will be the quantum of that loss, and what will fall under long term and what will be the amount of that capital loss. Just to summarize, you can set off short-term capital loss against long-term and short-term capital gains. However, the long-term capital loss can be set off only against long-term capital gains.
So this report will definitely help you to understand which are the stocks where you are, as per the specific date, you'll be making the loss. So in this case, based on yesterday's closing price, it is showing that Infosys is going to, if you exit Infosys, you'll be making 17,450 rupees loss. Similarly, if you are exiting Waterbase Limited, you'll be making 1,70,000 loss. So these losses you can set off against short term or long term, depending on the which loss it is.
Thanks, Tanmay. So
Yeah.
we are now going to open it for Q&A. Just to summarize, we have covered all the different capital gain rules for holding period and taxation for different asset classes like stocks, equity mutual funds, debt mutual funds, hybrid mutual funds, SGB, traded bonds, REITs, and InvITs. And an option to optimize your tax returns if you so choose to do. Then you can use an unrealized capital gain report to see what is the capital loss you may get by selling a script in order to offset it against your capital gains. I think we'll be concluding the session for today. Thank you for joining, taking the time out on a Saturday to join the session on capital gains and tax loss harvesting. We really appreciate your support, your constant support for all the webinars that we are doing. If there are any questions that have been missed out, you can always write to us at support@mprofit.in, and we'll be happy to guide you with all the relevant answers. We will be providing a recording of this session and also publishing it on YouTube in the next couple of days. So thank you for joining, and we hope this session has been helpful to you, and we appreciate your constant support and see you in the next webinar, which we'll be doing soon.